What's up, everybody? This is Sunko, the Korean bro. Today is 2023, August, September, October, November, October 27th. And let's see what articles we have tonight, okay? Mm. And Amazon Bits earning estimates touts AI as the future of its financials. Shares of the e-commerce bit surged 6% in the pre-market trading on Friday, falling above consensus earnings and supported by bullish comments around artificial intelligence. CEO Andy Jassy told analysts on the earnings call that AI represents an opportunity worth tens of billions for Amazon's cloud business. Amazon's Web Services. This year, AWS launched its Bedrock AI service, which streamlines the development of large language models. Our generative AI business is growing very, very quickly, said Jassy. In September, Amazon invested $1.25 billion in OpenAI competitor Anthropic. The investment could go up to $4 billion over time. Um, AI could provide the growth spur that AWS is looking for. In quarter third, the division fell slightly short of analyst net sales expectations, coming in at $23.6 billion against the $23.13 billion Wall Street expected. However, there were silver linings as AWS sales were up 12% year over year, and the division's operating income is also on the upswing, coming in at $7 billion, a roughly 29% increase from last year. That 12% growth is just enough to keep the goblins away. Jefferies analyst Brandon Thrill wrote on Thursday after earnings. It's been a week of mixed cloud results, making Jesse's comments stick out. On Tuesday, Microsoft reported better than anticipated growth in its Azure cloud business, while Alphabet's cloud growth numbers disappointed. AWS growth has been under a microscope this year, and it's a subject that has been getting the most airtime with investors. JP Morgan style and Moth wrote before earnings. In a call with the media on Thursday, Amazon CFO Brian Olszewski said that he doesn't believe AWS growth has stalled completely. Instead, characterizing the cloud business as in a delicate transition. The company is slowing down its cost-cutting moves as it looks to serve more customers, increasingly monetize its services. Currently, analyst recommendations for Amazon come out to 63 buys, 2 holds, and 0 sells. Looking ahead, keep an eye on those operating margins. Amazon's operating margins have been increasing, going up 32% between quarter first and quarter second, and clocking a notable beat in quarter third, which suggests that Amazon's post-pandemic efficiency efforts have been working. We analyzed 10 years of historical data and identified all periods when Amazon's operating margin either increased or decreased on a basis for 2 or more consecutive quarters, wrote Wedbush's Scott David before earnings. We then compared share price returns during those periods and found that on average, Amazon shares have appreciated 84% when operating margins are rising versus just 1% when operating margins are declining. Hmm. How low can you go? Getting to the bottom of the Nasdaq sell-off. Momentum has turned in tech stocks. Investors awakening from dreams of artificial intelligence nirvana Or back to a less grandiose concern, when will the selling stop? Uh, Down 11% from its July high, NASA 100 has now erased about a third of its AI-fueled advance, including a bruising 2 days that just lopped about $800 billion off share values. There's probably more pain in store. Venture strategies and traders core Thursday saying price earnings ratios have room to compress, and the treasury volatility remains too high to declare a bottom with confidence. Nobody knows where it will end, including whether it's already over, but here are frameworks for how to think about where a floor might be formed. Estimates are drawn from a mix of technical analysis, valuation comparisons, and how much more drubbing is in store for the AI oligarchy that propelled the gains. Hmm. Nvidia, Amazon stock splits, reverse splits can have consequences. Stock splits are a great way to increase investors' interest in a stock. A stock split does not change the value of the company, rather, it spreads the value across more shares. But splits have a downside. While total market capitalization remains unchanged, stock splits result in a lower price point for each share. So by splitting the share price, companies may be able to get price sensitive investors to buy the stock. Stock splits increase the liquidity of the stock as well. This is because companies issue more shares when the split goes into effect. If we take a 2-for-1 split of XYZ stock, after split, 200 XYZ shares replace 100 XYZ shares and half the original share price, both due to the lower stock price that generate greater investor interest and the greater liquidity. The stock split can lead to strong price action in the near term and even before split. For example, Amazon.com executed 24-1 split on June 6, 2022. On March 10, immediately after the split was announced, shares jumped over 5% on strong volume. The rally took the stock up more than 25% to a top in August. Nvidia stock splits in 2006 and 2007 are a case in point. The company made a 2-for-1 split on April 7, 2006. Shares fell after split into a low in July before rallying again. Okay, three reasons Roku stock looks like a no-brainer buy. The ongoing trend towards streaming entertainment should propel Roku. Its agnostic platform offers access to a variety of streaming services. Shares of the company are trading at a historically cheap valuation. There are some obvious factors that make this an easy investment argument. After dropping 82% in 2022, Roku shares have outperformed the market this year, rising some 50% through late October. There seems to be more optimism now surrounding the streaming platform, and thanks to recent developments, the stock could climb further. Leading streaming service Netflix reported strong subscriber numbers for the 3 month period that ended June 30. Investors likely hope that Roku will also impress Wall Street when it announces its third quarter financials on November 1st. Yet, while it's easy to get caught up in the short term momentum, it's best to take a step back and focus on attributes that make a company a smart investment over the long haul. There are three reasons this streaming stock looks like a no-brainer buy right now. Secular trend. The internet hasn't had a huge impact on the economy. One notable reason is how it's changing the way consumers view video entertainment. In other words, streaming is becoming increasingly popular. According to eMarketer, by the end of this year, fewer than 46% of households in the US will still have traditional cable TV subscriptions. And this so-called cord-cutting trend is set to continue in the decades ahead. That's because streaming provides a better experience for customers with lower prices, a bigger selection, the convenience of watching whenever you want. Roku is an agnostic platform, allowing consumers to access all of their favorite content from every different streaming service provider in one single interface. Hmm. Naturally, as streaming becomes more popular, Roku finds itself as a top choice for households to aggregate their subscriptions. In fact, it already has top market share in the US, and there are currently 73.5 million active accounts using the platform. Hmm. That puts Roku in a prime position to keep benefiting with the growth of internet based video entertainment. Network effects. Roku connects viewers with all of their favorite content. Plus, Roku allows advertisers who are looking to target this audience with a way to reach them in a connected TV environment. Consequently, an argument can be made that Roku's business model is underpinned by powerful network effects. This is what makes up the company's economic moat, a key trait that allows Roku to fend off rivals in the industry. If Roku is able to add more accounts, then content companies will want to offer their service on the platform, and this will make Roku more valuable to existing and prospective accounts because there will be more stuff to watch. And as more engagement occurs on Roku, uh, advertisers will want to direct their marketing expenses to Roku. Accounts trimmed a total of 25.1 billion hours last quarter, a clear sign of this engagement. Hmm. Chip valuation. Even though Roku stock has bounced back nicely in 2023, still 87% below its peak price, which was set in July 2021. Shares trade at a price sales multiple of 2.7. That's about 75% cheaper than their historical average PS ratio of 10.4. What's interesting is that even though the stock has gotten crushed the past couple of years, it's still been a wonderful investment. Rising 161% since its initial public offering in late 2017, that performance trounces the 104% gain of the Nasdaq Composite. It's better to buy stock at lower valuation, all else equal, as it indicates that there is more upside to the valuation should the company achieve success going forward. But investors who are looking to buy the stock now need to understand that their near term is still uncertain, primarily as it relates to macroeconomic headwinds. Hmm. Nonetheless, these three reasons are compelling enough for any investor to want to scoop up some Roku shares right now. Cheap valuation, network effects. Hmm. Three things the smartest investors know about Invesco QQQ Trust. Invesco QQ Trust is an exchange-traded fund that owns the stock in the NOS 100. The ETF comes with a relatively substantial expense ratio. Its portfolio has a huge amount of exposure to just a few stocks. It's an easy way to get exposure to the NOS 100, but there are risk investors ought to consider. Hmm. Okay, one artificial intelligence growth started to buy hand over fist in November 1st. Palantir, okay. Okay, let's see. The Wall Street legend views stock market drawdowns as an excellent time to invest. U.S. Treasury oil curve has been inverted for the past year, signaling that the economy could soon slip into recession. The S&P 500 declined by an average of 31% during the past 10 recessions, implying 20% downside from its current level. Warren Buffett says market declines are the best time to buy stocks, and he was warning investors to avoid market timing strategies. The Treasury yield curve says the U.S. is headed for recession. Bond prices and yields move in opposite directions, meaning strong demand for a bond would increase the price and reduce the payout, and vice versa. In that context, an inverted yield curve is caused by soaring demand for long-term treasuries relative to short-term treasuries, which signals uncertainty about the near-term strength of the economy. Think of it like this: recession fears push investors toward long-term treasuries because they offer risk-free returns over a period of years or even decades, which becomes increasingly compelling as the economic storm clouds together. That explains why yield curve inversions have historically been a relatively reliable harbinger of recessions. One of the most closely watched sections of the yield curve is the spread between the 3-month Treasury and the 10-year Treasury. That portion uh, of the curve has inverted prior to all 10 recessions since 1955, when only one falls positive in the mid 1960s. The precise timing of each inversion has varied, but recession has always followed within 24 months. So what? As shown above, the 3-month yield topped the 10-year yield in October 2022, and the curve remains inverted to this day. If historical trends persist, the U.S. economy will slip into recession within 12 months, but investors should consider this advice from Warren Buffett before making any decisions. The 3-month yield topped the 10-year. How interest rates are high interest rates are a primary reason some investors are worried about a recession. The Federal Reserve has fought inflation with rapid rate hikes, driving the benchmark federal funds rate to its highest level since 2001. But if Fed policymakers tighten credit conditions too much, they could choke the economy into a recession. Buffett has often discussed the relationship between interest rates and equity valuations. He made a particularly clever analogy during a 2016 interview with CNBC. Interest rates are like gravity in valuations. If interest rates are nothing, values can be almost infinite. If interest rates are extremely high, that's huge gravitational pull on values. While long-term treasury yields are sometimes used to value stocks in a discounted cash flow models, a framework that attempts to determine what a company is worth by discounting future cash flows back to their present value. As Buffett told CNBC, if interest rates are declined to be at low levels, it makes any stream of earnings from investments worth more money. Here's the bottom line. High interest rates mean higher risk-free returns, which makes bonds look more attractive related to stocks. In other words, high interest rates reduce future earnings for stocks, so investors are willing to pay less for stock and their prices tend to fall. Recessions tend to be bad news for the stock market. Indeed, the S&P 500 declined an average of 31% during the last 10 recessions. For context, the index is currently 11% off its high. So if the US economy does indeed slip into a recession, history suggests the S&P 500 will fall another 20%. But that is no reason to avoid the stock market. In fact, there are two good reasons not to avoid the stock market during an economic downturn. First, recessions have historically been excellent buying opportunities. To quote Buffett, the best chance to deploy capital is when things are down. History corroborates the climb. The S&P 500 returned an average of 48% during the two-year period immediately following the bottom of the last 10 recessions. Second, making market timing strategies tend to fail. To quote Buffett, I haven't the faintest idea as to whether stocks will be higher or lower a month or a year from now. What is likely, however, is that the market will move higher, perhaps substantially so, well before either sentiment or the economy turns up. In other words, the stock market is forward-looking. It tends to rebound before economic activity reaches a bottom. Mm. So investors that sit on the sidelines during recessions are virtually guaranteed to miss the rebound, meaning their portfolios will almost certainly underperform over a long period of time. 836 million reasons why I'm not touching Tesla stock with a 10-foot full paw. First, I finished reading Google Maps up the immersive view for routes and new AI features. Okay, today lithium refinery groundbreaking. Okay, I'm reading an article published by Tesla employee. Um, and it's posted on their website. And my plan is to read their article once a day. Uh, in total, I invested money into six companies. Seven companies. And I plan to read an article from each company. Uh, one article, one company. And I'm planning to read an article published from each company every day. because uh, to keep up with what's happening with their uh, to keep up with what's happening to their company. I can get to know ins and outs, mm, ins and outs of company, which makes me more mm, comfortable. I mean, which makes me feel more comfortable in terms of trading. I mean, like in terms of investing, right? So anyway, today we're breaking ground on Tesla's in-house lithium refinery located in the greater Corpus Christi area of Texas. Once complete, the facility will represent an investment of $1 billion in Southwest mm, Texas. This investment is critical to our mission, as in Tesla's mission, to accelerate the world's transition to sustainable energy and represents our efforts to aggressively increase the supply of battery-grade lithium hydroxide available in North America. The 1,200 plus acre site will be the location of the first industrial. This process eliminates the use of hazardous reagents and byproducts in favor of more inert options. The byproduct from this facility, a mixture of sand and limestone, is useful in the production of construction materials, making beneficial use of traditional waste streams. In the future, we expect this facility to also process other intermediate lithium feedstocks, including recycled batteries and manufacturing scrap. The construction effort will create nearly 1,000 construction jobs. The facility will employ upwards of 250 full-time employees, including production technicians, operation. The construction effort will create nearly 1,000 construction jobs. The facility will employ upwards of 250 full-time employees, including production technicians, operation managers, and engineering roles to support ongoing plant maintenance and optimization. We are also committed to building talented pipelines in the greater coastal Bend area through education investments in the Robstown Independent School District, apprenticeship pathways at Delma Community College, internship opportunities with Texas A&M Corpus Christi. Okay. Okay. Lenovo and NVIDIA announces hybrid AI solutions to help enterprises quickly adopt Gen AI. New end-to-end solutions include accelerated systems, AI software, and expert services to build and deploy domain-specific AI models with ease. You know, Lenovo and NVIDIA today announced an expansion of their partnership with new hybrid solutions and engineering collaboration that supports their shared vision to bring the power of generative AI to every enterprise. In close collaboration with NVIDIA, Lenovo will deliver fully integrated systems that bring AI-powered computing to everywhere data is created. From the edge to the cloud, helping business easily deploy tailored generative AI applications to drive innovation and transformation across any industry. The offerings were described by Lenovo Chairman and CEO Yongqing Yang, NVIDIA founder CEO Jensen Huang at the annual Global Lenovo Tech World keynote held in Austin, Texas, where they discussed the business need for end-to-end solutions that bring together accelerated systems, AI software, and expert services to quickly build and run custom AI models using their own data. Supported by the new Lenovo AI Professional Services practice, the solutions enable enterprises to use a hybrid cloud approach, building their custom AI models using NVIDIA AI Foundation's cloud service, and then running them with on-premise Lenovo systems powered by NVIDIA's latest hardware and software designed for generative AI. Solution uh, enable enterprises to use a hybrid cloud approach, building their custom AI models using NVIDIA AI Foundations cloud service, and then running them with an on-prem Lenovo systems powered by NVIDIA's latest hardware and software designed for generative AI. Together, Lenovo and NVIDIA are driving a new era of hybrid AI for business, designing the next generation of technology that deliver an AI-powered future now and unlocks the power of their data anywhere it is created. President of Lenovo Infrastructure Solutions Group. Lenovo's expanded engineering and time-to-market partnership with NVIDIA simplifies the path to generative AI for all and helps customers anywhere rapidly use cutting-edge AI to transform their business. With generative AI driving the greatest technology transformation of our time, enterprises are seeking solutions that give them the flexibility to develop and deploy workloads across your workstations, data centers, and clouds, said Bob Pitt, Vice President of Enterprise Platforms in NVIDIA. NVIDIA and Lenovo are providing a comprehensive portfolio of hybrid AI systems the business can rely on to power generative AI from virtually anywhere, enabling business to securely implement AI faster. Lenovo's NVIDIA Power Systems are optimized to run NVIDIA AI Enterprise software for secure, supported, and stable production AI. With the NVIDIA NeMo framework included in NVIDIA AI Enterprise, organizations can customize enterprise-grade large language models available in NVIDIA AI Foundations. Using the latest retrieval augmented generation technique and fine-tuning methods, enterprises can build generative AI applications with their unique business data, which are optimized for production running on Lenovo hybrid AI solutions. At the center of the company's expanded partnership are the Lenovo ThinkSystem SR67533 server and ThinkStation Arcs PX workstation, which are optimized for production AI running NVIDIA AI Enterprise. Together, the companies are empowering businesses to easily deploy AI with confidence and begin their AI-driven transformations. With the new Lenovo AI Professional Service Practice, Lenovo's Trust Scales us offering, which enables business to leverage a pay-as-you-go model. You know, so uh, to summarize what I just read, basically this is what it is. Lenovo and NVIDIA, uh, they are having partnership which will enable them to, have some advancement in the future uh, to make AI uh, more useful, and what they try to do is to make it more efficient and be useful and be practical in our daily lives. And they have that kind of same goal. Mm. Okay, next article is Roku. Today, Roku announced plans to order a second season for unscripted Roku original series Reptile Royalty, UFO Cowboys, and Lincoln Lockmasters among the family adventures with the Brewers clan and bringing our audience more of Reptile Royalty. From ITV America, the Roku channel is the home of free and premium entertainment on the Roku platform. In quarter 4 2022, the Roku channel reached US households with an estimated 100 million people. The Roku channel is a top 5 channel on the Roku platform by active account reach and streaming hour engagement today. The Roku channel features a diverse lineup of more than 80,000 free movies and more than 400 free live linear television channels. US licenses and distributes content for more than 250 partners. Roku partners streaming on TV will connect users to the content they love, enable content publishers to build and monetize large audiences, and provide advertisers with unique capabilities to engage customers. Roku TV models, Roku streaming players, and TV related audio devices are available in various countries around the world through direct retail sales and licensing arrangements with TV OEM brands. Roku branded TVs and Roku smart home products are sold exclusively in the United States. Roku also operates the Roku channel, the home of free and premium entertainment with exclusive access to Roku originals. The Roku channel is available in the United States, Canada, Mexico, and the United Kingdom. Roku is headquartered in San Jose, California, USA. Anyway, this article basically says they're about to start new season uh, of drama, which is something that I never know because I hardly watch drama. Anyway, its name is Reptile Royalty UFO Cowboys Lincoln Lockmasters. Probably they are the ones they gained the popularity recently. So because of these series, it probably helped Roku channel uh, have some growth. So okay. The last but not least, I'm going to read a Shopify article and okay, let's read this one. Shopify beta launches world's first global entrepreneurship index. US, Lithuania, Romania ranked top 3, Delaware number 1. Yes. We often talk about the power of entrepreneurship, but just how powerful is it? What impact does it have on economies, and what environments are providing entrepreneurs the best chances of success? There's never been one place to go for all the answers to these questions. Now there is. Today, we're beta launching the Shopify Entrepreneurship Index, the world's first home for data and insights on global entrepreneurship across 40 countries and all US states. Shopify powers millions of businesses globally, providing the data and that when needed to build some that did not previously exist, a comprehensive data set on entrepreneurship around the world. The Shopify Entrepreneurship Index measures economic impact of entrepreneurs in Shopify's ecosystem on national economies, tracking the fastest growth and greatest contributions. Today's launch is the beta version of the index. We're just getting started. In the future, we'll add even more data aimed to inspire smart policies and give leaders the insights they need to harness the power of entrepreneurship. We'll continue to update this index quarterly. Supported 5.2 million jobs, generated $27.7 billion of exports, contributed $229.3 billion to GDP, created $490.5 billion in economic activity. Leading the index was the US, which saw an 11% increase in total jobs supported. Since 2021, Delaware was the top-ranked state. Wyoming came in second, and California ranked number 3. Countries in Eastern Europe earned second and third place globally. Lithuania's second position is a testament to the country's investment in financial literacy, entrepreneurship, and new technologies that keep its business competitive globally. In third place, Romania saw a huge rise in e-commerce following an increasing digital transformation of the country. Japan emerged as Asia's entrepreneurship engine, earning 10th place on the index. Much of Japan's growth comes from its government focus on cross-border trade, improving the funding environment for small businesses. Read on to learn more about these findings. Entrepreneurs are the fuel that drives the economies forward. They create jobs, they anchor communities, they make an impact that goes far beyond their own business. President of Shopify previously, there wasn't enough public data showcasing the superpowers impact of entrepreneurship. That's why we're launching the Shopify Entrepreneurship Index. Our goal is to give decision makers the insights they need to reduce barriers, make entrepreneurship even more accessible to everyone. This new report will be a valuable resource for a wide range of stakeholders, including academics, policymakers, and business leaders who are seeking data on the rising phenomenon of digitally enabled entrepreneurs. This initiative serves many benefits. The quarterly cadence of release is particularly important as it reflects the dynamic nature of entrepreneurship. It will further all afford the tracking of trends over time, providing important insights into the state of entrepreneurs. Okay, anyway, this is it for today. And I'm gonna see you tomorrow, okay? Happy Friday night and have good night, okay? Bye bye, everybody.